So we get to this topic, which is known as conceptual framework. Definitely not the most exciting thing within financial accounting, but it's pretty necessary to understand what it is so that you can kind of understand why certain things work the way they do within financial accounting. And it's also going to be helpful with later financial accounting courses. Plus, understanding what conceptual framework and the conceptual framework system is might earn you a few marks or two on your Intro to Financials quiz or tests, maybe on some theory questions. So that's why we're going over it. And I think the one biggest part and the most important aspect of the conceptual framework system is what is known as GAAP. I cannot write today. Which is known as GAAP. And GAAP is this acronym which stands for Generally Accepted Accounting Principles. And essentially, this one part within the conceptual framework system is a set of concepts and constraints that kind of provide a guideline for accountants to follow while preparing financial statements so that they're consistent in quality. So it's essentially a set of guidelines that creates a fair reporting system within financial accounting. And I thought I might just add a formal definition in case any of you might actually need a formal definition for what conceptual framework is, in case you need to memorize something for a quiz or a test. And I've just left it there. I'm not going to read it. You can pause the video and check it out, but I'm just going to go ahead and explain it through illustrations what conceptual framework is. So, the conceptual framework system is this system which does include GAAP, but it also includes a few other things which I'm going to actually list right here on the left side. It includes these 4 different things: objectives, elements, characteristics of information, and GAAP. And I'm going to go over these in just a second, but I thought I might illustrate essentially what the conceptual framework is with this circle diagram which I have right here. So if you think about this circle, think about the circle outline, the green neon outline, as conceptual framework. And essentially, as long as we comply with some of the concepts and constraints within the conceptual framework, we're going to be practicing safe accounting practices and fair reporting. So as long as we stay within the conceptual framework and we don't deviate too far away from GAAP and do anything too aggressive, you should be essentially performing your accounting duties responsibly. But it starts to get a little bit sketchy when you go outside the conceptual framework system and you start deviating away from certain GAAP constraints and concepts which you're supposed to comply with, and you get into this territory which is known as fraudulent accounting, or it might not even reach that point. It could just be a very aggressive reporting, but it can definitely cross into that fraudulent accounting territory if you really start misrepresenting what's really there. And that's essentially the conceptual framework system. We want to stay within it, and it's kind of a system that has to do with fair reporting within the financial accounting subject. So I'm just going to get rid of this and all this green text over here, and let's go ahead by going over these 4 different things within the conceptual framework system. So the first is the objectives of financial accounting, which has to do with reporting assets, liabilities, and equity, the changes within these different elements, and essentially reporting the performance of the company. The elements have to do with what we have already actually gone over. I think it's video number 3. I actually covered this. It includes, or the financial accounting elements are like assets, liabilities, equity, revenues, expenses. I'll probably add a little annotation right there so that you can click on that, and you'll be sent to the video on financial accounting elements. I just don't think I should go over it again. Characteristics of information. This is probably something you'll run into maybe on your test or quiz. You'll see certain characteristics and you might have to define them or something, maybe a multiple choice question. They have to do with 5 different characteristics. First being understandability. So this characteristic has to do with the financial statements and making sure that essentially the financial statements are understandable and that they're not overly complex to the point where you have to be some financial accounting wizard to decipher what's going on within the numbers and disclosures within the financial statements. The second part is relevance and reliability. And these characteristics, well, relevance has to do with whether the information is going to make an impact on your decision making, which it should, because if it's good information, analyzing the documents should make an impact. And reliability, making sure that if we verify, or the numbers can be verified, so it really doesn't matter if I report the numbers or you report the numbers, we should both be getting similar output in our financial statements. So we got to make sure that the numbers are all really there and reliable. The last 2 characteristics are consistency and comparability. And consistency has to do with using consistent GAAP policies and concepts and constraints, fiscal period to fiscal period. And comparability has to do with essentially being able to compare financial statements. So if we were to look at maybe the financial statements of Ford and GM, we'd be able to look at their numbers and kind of evaluate which one is doing better relative to the other. So those are the characteristics of financial information. I've just kind of done a quick summary of that. But the real meat of the conceptual framework system is really GAAP. And there's a lot to GAAP. Not enough, or I can't really include everything there is to GAAP within this one tutorial because it would go on for way too long. But I'll touch on I guess two different GAAP concepts so you kind of understand what there is to GAAP. And I guess the first one we can kind of go over is the revenue recognition policy. So if I were to maybe think of maybe a company, well, first let me just go over that. Revenue recognition has to do with a way of recognizing revenue within a company and kind of conforming to a reasonable way of recognizing that revenue. So if I maybe were running a Christmas tree selling business, most people, they would report revenue once the Christmas trees are maybe cut down and sold, and we actually have payment from the customer in form of maybe credit or cash. That would be really a reasonable way of reporting revenue. But deviating away from this GAAP policy of revenue recognition might be, let's say when we plant the trees and we have certainty maybe that 80% of the trees will be sold. So before we even sell any of them, we're going to report the revenue and essentially act as if they're already sold. So that would be a really aggressive revenue recognition policy. So you can see how it can really deviate from what they really want you to comply with, and you can see how far it can go to a point where it almost is seemingly fraudulent. And another GAAP concept might be the economic entity principle, which essentially is if I have a business and obviously I have another company on the side, well, this is just me as a personal person, and this is my company. And if I have certain assets like my own house and maybe a car, I can't really draw a car, um, but if I have certain assets like a house and a car and a boat, I can't mix up those assets with the assets of the company because the assets have to be entirely separate. I must have one set of books for me as a individual person, and I must have one set of books for my company. So it states that the economic interest of my company should be separate between myself and my company. So that's another gap concept that we should comply with. And there's many others which I'll probably go over in another tutorial, but I just kind of wanted to give you an example of what the conceptual framework system consists of. And it consists of all these things, and it really gives you the fundamental idea behind financial accounting and certain characteristics of financial information and things we're supposed to comply with. So if you have any questions regarding this, just make sure to leave them below. Make sure to subscribe, and I'm not exactly sure what we'll be covering in the next tutorial, but I will see you there.